Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. I'm Mastro, and this is your routine briefing. So let's have a chat on this lovely breakout day. And it is a breakout day in both our friend ES here, as well as volatility. And volatility is really the major story of the day, so we're going to talk about that pretty quickly into this briefing here. So just going to really outline very quickly what's in the warm-up document. So you had that balancing action overnight, really consolidating along that super important 40 to 45 area. And then you saw the initiation. You saw that open test drive. It looked like we might have a little bit of that open auction type look, but the bulls really quickly took control there and really haven't looked back. So we're currently beyond the expected move, a pretty good bit here. So we'll see if we do pop back in. Right now, as I'm watching my screen, we are at about 44.75. Expected move, top of that is about 44.65. So definitely super bullish, and a lot of this action occurred within the first hour. In fact, almost all of the major move here occurred in that first hour. So we'll see if the high day is in. If we push a little higher, we'll see what happens as the afternoon comes. So this warm-up document is available in the description of this video, where you can see all those lovely levels as I change them throughout the day, and as well as any other relevant things that you see on the screen here. You can see a lot of my strategy and setups right in the bottom right, or really almost the entire second half of that picture. So that's what we got going on with the warm-up, but really the major story today is a big story, and that is the triangle breakout and volatility. This chart goes back, not this particular image, but this triangle has been filling out since July. And so this is a really big breakdown. Am I going to say the reason that of the move is purely because of volatility? Well, I don't know. However, I do think that it's super important, and especially the fact that we've now made a new low on the year for this contract definitely lends to the bull case that I've been harping on all week. So just to review the two major things there, again, you'll see this in the newsletter. But for those of you who don't read the newsletter, first of all, what are you doing? It's at retailtraining.com. It's free. It's in your inbox. It's pretty, and I think it's pretty darn helpful, especially you've been checking it out the past several weeks. So that's just my little plug for that. But anyways, I'm just going to reiterate the two important things here, and that is going to be since 2003, the week following Jackson Hole has been green 83% of the time. And number two, you saw that reversal 3 candle, or anybody who's been paying attention to the newsletter or these briefings have seen that reversal 3 candle from, I believe it is the 17th of August. Since then, I think bulls have had the momentum. You saw that volatility divergence back then, and until that low breaks, I assume bullish momentum that way. So definitely a lot of bullish stuff going on, and we just really got to be careful if we're fading it. I personally have no interest in fading it until intraday speaking. If we have a crazy turnaround, we pop back below, say about 44.38ish, we unwind that open test drive. Might be compelled to stop out of my long runner I got going on here and take that short. And then the second scenario is if we do start to see a reclaim of that 17 area in volatility, well then maybe, just maybe, the bears may have a shot. And what do I mean by that? So why am I not super gung-ho, bearish have no chance, bullish? Well, I try not to ever have such an opinion, but especially given what we're seeing going on in this developing head and shoulders. So there's still plenty of room. I believe the top of the left shoulder is somewhere around that 4,500 area, and I could even see a little false breakout above that 45.05. So there's still plenty of room, plenty of points to keep filling up on the upside here. And so, the bears could definitely come in and spoil the bull party. We have seen a little bit of increase in the relative volume today. Nothing too crazy. It looked really good earlier, but it's kind of petered out here just a little bit. So it is an increase from yesterday. Yeah, it's not one of those high relative volume days that are completely confirming that reversal. So there's still, I think, plenty of chop to go on here, and really until bulls can hold above that 4,500 area, we have to be mindful. So watching that volatility breakout, that is again a more than 2 month pattern, or about 2 month pattern, and so let me see. Yes, about 2 month pattern, and so that's very significant. So definitely we'll be watching that and erring on the side of bullishness. And yeah, really not too much to do. I haven't added to my trade at all today. I've been long since yesterday, 44.30, and just kind of letting this runner rip. I haven't got that ad, but I will be looking for the ad definitely if we do get a retest near the top of that expected move, and obviously all the other various confluence if that does want to come into play. And so just the final thing for this briefing is going to be a look into value. So I was talking about last week, particularly before we had that sell-off on Thursday, how despite the up move, you had that up move on low relative volume, as well as the fact that balance was not rotating higher. Well, now you're starting to see that balance rotate higher. In fact, we have a really very clean look across the three profiles today, where you have the POC at the same level. You have the really nice, I think, primary LVN there right at about that 50-ish area. So 44.40 to 44.45 in the ES is now very nice, strong support, and you've seen that balance rotate higher. So again, just lending to the probability, especially if VIX volatility / VX stays where it is, that the bulls are going to have a sustained reversal here. So obviously not trying to crystal ball it. We'll have to see what happens, but that is what I am seeing today. So if you're finding this useful, you found this video useful, I'd appreciate that thumbs up. That like helps with the YouTube algorithm and really makes me feel warm and fuzzy inside, like I like to say. And besides that, I appreciate any engagement, be it in the comment section of this video, a reply to the email itself, or on Twitter, where you can find me at Routine Trader. So I thank you for your attention and hope you stay classy until tomorrow.